So in this section, we're going to talk about momentum indicators. Momentum indicators are good at measuring the momentum of a trend. It kind of measures buying versus selling pressure. So it can tell you when a market is overbought versus oversold. And most momentum indicators are just based off of formulas that are calculated from moving averages. So we're going to look at two lines here on bitcoinwisdom.com, which is a free site where you can get some charts. And these two lines here, this blue-white line up here is a 7-day moving average. So just kind of calculates the moving average over the course of 7 days. And then you have the orange one, which is a 30-day moving average. And usually when it crosses, like if the 7-day moving average, which moves faster, when it crosses under the 30, that's generally an indication that you're going in a downtrend. Now, sometimes you can get false signals as well. So it's good to use it in combination with other indicators as well as technical analysis. But as you can see here on the 1 hour chart, the white line crossed under the orange line, and then it kind of bounced back. This red candle kind of bounced back up. So that could have been like a good short entry right there. But sometimes you'll get a lot of false signals, right? So not every single cross will be a good signal to trade on. So that's why it's good to use in conjunction. So let's also look at the relative strength index, also known as the RSI. Now, in order to read the RSI, you can see anything under 30 right here is considered oversold. So this is generally when a market is really exaggerated to the downside. And if you look at anything above, let's say 70 or 80, then you can see when things are overbought, right? When things are just getting a little bit too bullish. So as we can see here, the market was extremely oversold, lower than any other point, and then it bounced up, right? And what's interesting about this is you can look for what's called divergence, right, in momentum. And what divergence is it shows you that it shows you when the markets are losing momentum. So here you can see that on the charts where we have a series of higher lows. But when you look at the RSIs and the momentum, it's making lower highs. So this is called divergence. So this is kind of like a warning sign that even though the price is going up, it's losing momentum. And momentum is really important in order for a trend to continue. And you could also get divergence in the opposite direction as well. So this is kind of an interesting indicator to be able to use in conjunction with your technical analysis. And then I'll show you another form of RSI. It's called the stochastic RSI. And I generally use this for scalping, especially on the lower time frames. So you have two types of lines. You have the percent K line, which is a faster moving line, which is the white line right here. And then you have the percent D line. So generally when the percent K line is falling, it means that momentum is also falling or descending, and vice versa. And so you can use this to be able to kind of help decipher where the bottom is and to see when there's a trend or change in momentum. So these are just a couple of indicators that you can use for trading, and I'll see you in the next section. Cheers.